Morning traders, and this is your DAX day trade setup for today. So last week Thursday, we closed off with a fairly bullish bar, and futures market at the moment is also up right now. The DAX is pretty much, let me just get it, is up 0.76% at the moment. What's concerning me is that the US markets are coming up to major Fibonacci levels, and I do suspect that the DAX is going to follow suit. German market is under pressure as it is without the going-ons in the world at the moment. So I do suspect we're going to find some kind of a level soon. So first things first. So if I take this move down, so we had first move down, pull back, second move. So we just take a second move Fibonacci. We're at 61.8 at the moment. Currently we're through that. The 73.6 is a level, Fibonacci level, which the DAX tends to enjoy as well. Also great entry because your stop is always sort of above 100% here. But if we move up to this level here, you can see the 50% Fibonacci is right at the top here. And that to me is something that we need to pay attention to. Okay, so let's just put a level on that, and let's delete the fractals. So I'll delete this. Right, now let's come back down to the lower time frames. So at the moment, we do have a potential double top here, looking at 3-hour. Trend is very much to the upside, and obviously a double top is only going to be verified once we break below the lowest point of the double top. So for now, this is an upward trend. What's concerning me is these oscillators. You can see the oscillator groups there. We pull back. Oscillators cross far apart. I often talk about that. And then you can see we rallied. Okay, and you can go back in time and you can see whenever the oscillators group to the upside, there's normally some kind of a pullback. Okay, and a bit of a warning that the move is over. Whenever they group to the downside, buyers are coming in. Okay, that's really just an indication of overbought and oversold conditions. Here you can see a crossing far apart. It didn't have a big move, it was a move nevertheless. Then we had a crossing far apart in the opposite direction, rallied. Then we had a crossing far apart, well not far apart, but apart, and then it started a bigger move down. Okay, so it's something to be used in conjunction with everything else. Right, so what are we anticipating today? So we've really got a gap up at the moment, so I suspect we're going to have a gap up and a move to 10,986 or even the round number of 11,000, but somewhere between 10,986 and probably 11,100 area, you're going to find some resistance there, and sellers trying to drive the market off that level. Now, I know federal banks are pumping money into the markets at the moment, which is causing quite a bit of buying to happen, but I don't think they've got enough money to keep this thing going and keep it afloat at the moment. Granted, they can print more, and they probably will print more, but that brings another dilemma to them as well. So for me, I am anticipating that this is going to fizzle out fairly sooner than later. So for now, the trend is up, so we should be trading the trend. Don't try and pick the top. I mean, that's just a recipe for disaster. So trend is up, go with the trend. How are we going to do that? Get down to your 12 or 6 minutes or 15-minute charts, whichever one you prefer trading, and trade with the trend on that level. You can see Friday's example here. There's some great price action movements here. So I just want to see if it's what it looked like on the 6 minutes. Pretty much the same structure. Okay, so you can see we rallied, a grouping of all the oscillators here. And normally what happens is you get a grouping, a fine grouping, and then they sort of stay above the 80. Okay, stay above this red line here, which is the 80. And they stay above it, and then they sort of cross over. But what you're looking for is you're always looking for levels. Okay, so where was the level? Look to the left. There wasn't quite an inside fractal, but it was a high. And you'll probably find an inside fractal further on. Yeah, quite a few. There it is there. Some congestion here. Now if we come back down to that 6-minute chart. So we've got a level, then we've got hanging man, two hanging men. We've got an inside bar here, another inside bar, then an engulfing. So look at the pattern you see. It goes up, come down, goes up, come down, goes up, come down. Confusion, right? So what are you anticipating? A break either up or down, okay? Because what's happening here, you've got inside bar, then you've got bullish, you've got a bearish inside, bullish engulfing. Bearish inside, bullish inside, bearish engulfing. So it is confusion, but we're off a level. So the probability is we're going to move to the downside. So your entry is on the break below these bars here, because that's basically a little range that's happened. The break is here. You can see we broke, we came back to the retest, and then we moved down. First target would have been the gap. Second target would have been my 200 EMA. And then you can see here how we try to break through, back up, back, and now we start again. So there you've got a signal, but it's not a decent signal because it's a red pin bar for level. A little bit of a move. Moving average is still pointing down. Then you have a much wider move, so big up, big down, big confusion. But the important part here is inside bar, a decent inside bar with an exhaustion bar, and then an engulfing bar here, off a level again. Everything coming together. A break up, a move back down to come and test the break. Buyers say, cool, that's fine, and they buy. Okay, so that's the beauty about the smaller time frames, is just your price action works pretty well, your oscillators work very well. And you can see here we start grouping again, grouping through the previous high, exhaustion bar through, get out of it. Okay, even if you took profit at the previous high, there's a little bit of an exhaustion bar as people frantically buy as they break through here, but the bears were waiting here to sell off that level. Okay, anyway, so price action is key. Here's another double bottom here, and that double bottom more than likely played out. I wasn't trading this market, so let's just have a look here. So there's the bottom of the double bottom, there's the upside to there, move that level up, and Bob your uncle, we hit it right at the end. Okay, so my advice to you today is pretty much exactly the same. If you are above the alligators, well, not alligators, sorry, moving averages, same concept. You're buying. If you're below, you're selling. You're looking for price action to indicate, off a level to indicate the fact that you need to take profit or get in the opposite direction. And I think the volatility is going to continue, so you should be able to make quite a bit of money out of this. Obviously, you don't want to be selling short over here when you've got a level, okay? And you don't want to be selling long over here when you're at a level. So you want to be short when your oscillators are grouped like this and you're at a level, and you want to be long when your oscillators are grouped like down the bottom here, but off a level. So you can't jump in here because oscillators are there. Wait for the level to be tagged. There's a level. And even just taking it off the 200 and giving yourself, on the DAX, I would pretty much give myself sort of 100-point stop losses, or even just go up one level and trade it off for 12 minutes. It's losing a little bit of meat on it, but you can see how much clearer it is there. Grouping, two hanging men in a row, break below it indicates trade to the downside. There it is, and your stop is 50 points. Down the bottom, you're not really off the level, so put your levels in. Okay, there's my level there, but there is definitely another one here, which is there. Now DAX often does this, hits the first level, bounces off it, and then comes back for the next level. But you can see here your moving averages aren't really grouping all the way through. It's only when you break through with this bar here and then come back to test the break. And the break that it was testing was right there. It was this bar's breakout here. Up and down. Okay, so I think for today, pretty much the same scenario, but I think the bigger target to the upside is this area here. Okay, so 10, 9, 8, 6, or 11,000. That's what you're looking for. So looking for a long stall, looking to get up to that Fibonacci level, and then we'll have a look, see what happens from there. So I think you are going to get an opening gap up and a bit of a rally to the upside. Just watch your price action, and you should get a good 200 points to the upside on that trade. Then look for a move to the downside. But whatever you do, keep those stops really tight. And you're looking for, it's going to come back to this 12 minutes here. You're really looking for a nice, decent setup like that. Okay. Or like this. See the pin bar rejection off there. So you're looking for some really good price actions. If you're not sure what price action I use, look at my channel. There is a video specifically on the 5 price action points I use. It's inside bar, inside bars, it's engulfing bars, it's pin bars. Pretty much those 3 that I utilize the most. When I see that kind of price action, there's a pin bar. I typically always look for an entry, and never the first signal, always looking for the second signal. Okay, anyway guys, that's my view for today. Looking for this thing to continue to the upside, probably to Fibonacci level, and then we'll reassess to see what's going to go on. But I have a feeling any micro double top off the top here for lower time frame is definitely going to attract me for a medium term short. Okay, hope it helps, and we'll catch you later. Cheers for now.